Given that tax filing season will be here in less than 2 months, what actions can you take now to reduce the amount of taxes you'll have to pay on this year's hard-earned income? In today's video, my colleague Jessica Nelson and I will go over 2 smart tax-saving ways to donate to charity, donating appreciated securities, and contributing to donor-advised funds. Also, be sure to watch till the end of this video where we'll go over a bonus tax-efficient charitable giving strategy, the qualified charitable distribution. I know it's a mouthful, but if you meet the criteria, it could make you feel even warmer inside when you give to your favorite charities. Hi, everybody, and welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides key investing and personal financial planning insights to help physicians achieve their key life goals. Before I bring in Jessica, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal financial lives in a fully objective, no commissions manner, while as a legal fiduciary, always putting our physicians' best interests first. As physicians, you'll probably also want to know that Altfest is the preferred wealth manager for members of the Medical Society of the State of New York, and the preferred wealth management education provider for both the New York chapter of the American College of Surgeons and the New York State Society of Orthopedic Surgeons, just to name a few of our medical association partners. As I mentioned, my guest today is Jessica Nelson. Jessica is a certified public accountant, a certified financial planner, and a financial advisor at Altfest Personal Wealth Management, where she helps her clients optimize all areas of their personal financial planning and investment lives. So Jessica, thank you very much again for being on today's edition of Wealth Matters for Physicians.
Of course, thank you for having me.
Well, great. Well, let's get right to it. So regarding year-end tax-efficient giving strategies, giving to charity strategies, let's start off with gifting appreciated securities. So Jessica, for the physicians, why is it better to sometimes give appreciated securities rather than just writing a check from your checkbook?
Yeah, absolutely. Well, first we have to understand how appreciated securities are taxed. So when we're looking at appreciated securities, specifically a holding that you've had for over a year, when you go and sell that security, you would be forced to pay long-term capital gains tax. And the top rate for that is 20%. Additionally, if you have income over a certain threshold, you may also be subject to net investment income tax,
Wow.
which is an additional tax of about 3.8%, right? So if you were to gift, let's say you were to sell that securities and then gift the proceeds, one, you wouldn't be able to gift as much because you have to pay those taxes, and two, it's the fact that you have to pay those taxes. With gifting those appreciated securities outright, what's great is you avoid that long-term capital gains tax, and you also avoid the net investment income tax. And you get to deduct the fair market value of that security on the date you sold that, right? So you get that increased tax deduction if you're itemizing, and then also you get to give more to your charity.
Wow, that's really great. I mean, you're getting like a double barrel bonanza, right?
Yeah.
You're getting a bigger deduction, and you're getting more money going to the charity that you love.
Exactly.
Gotta love that, right? Excellent. So let's talk then about a new thing called a donor advised fund. So just again, briefly, what is a donor advised fund and why can that benefit you financially when you give to charities?
Yeah, absolutely. So a donor advised fund is a fund or an account that you set up, and you can give cash or appreciated security to that donor advised fund. And then that fund gets to distribute those holdings to the various charities of your choosing. What's great about donor advised fund is you get the tax deduction in the tax year you contribute to that donor advised fund, but the fund doesn't have to distribute to charities right away, right? You can do this over the course of several years. So let's say I know what my gifting strategy looks like for the next 5, 10, or 3 years. I can go ahead and I can front load that, and I can put all of that into the donor advised fund and then slowly give out to charity. Just to add on to the benefit, if I time things correctly, I can choose to, contribute to my donor advised fund in a year where I have higher taxable income claim that higher deduction, and then in subsequent years, I can just take the standard deduction, right? I don't have to continue to itemize. So this is a great planning opportunity.
Great, and I know one thing that you've explained to many of our physician clients is that you also want to be very aware of what's your standard deduction versus, how much itemized deductions you have.
Exactly.
Because I know, as you've said, you might be, let's say, giving a certain amount every year, but that certain amount where you try to take it as an itemized deduction, but because you don't have enough in total itemized deductions, you end up taking the standard and don't get any benefit. So by putting or front loading a certain amount of years worth of charitable deductions, you might be able to then be significantly above the standard deduction with your itemized and get a lot of that to go to help your taxes, to help reduce your tax burden.
Yeah, and that's really important right now, because right now we have this higher standard deduction that we have in the past. So more and more people are finding that they're claiming the standard deduction just because they don't have enough itemized deductions. So this is something that you definitely want to pay attention to.
Thank you very much. So lastly, Jessica, what are these things called qualified charitable distributions? It's really a mouthful. And how can they help physicians tax-wise when they're giving to charity?
Yeah, so qualified charitable distributions, also known as QCDs, are distributions directly from your traditional IRA to your designated charity. So what's great about QCDs is, one, QCDs help satisfy your RMD. So once you are age 72, you are required to start withdrawing from your retirement accounts, right? And there is a minimum amount that you have to withdraw. What's great about QCDs is they can help you satisfy that requirement. To even add on to the benefit, the amount that you're donating to charity is not included in your taxable income. In fact, you can essentially think as QCDs as an above-the-line deduction, which is much better than a below-the-line deduction, where it's something that you would have to itemize for, right? So with QCDs, you get to satisfy your RMDs, and you also reduce your taxable income.
That's really, really excellent. So are these QCDs, or qualified charitable distributions, are they available to everybody? Can you give as much as you want? How does it work?
So in order to do QCDs, you have to be 70 and a half. But most people wait until they hit RMD age, which is currently 72, to do them, because that's kind of when you can max out your benefit from them, right? And you can do up to $100,000 in QCDs, which is pretty significant.
Excellent. Up to $100,000 per year. That's a lot of impact.
And per person. So if you're a married couple, you each get that $100,000.
Excellent. Excellent to know. Well, Jessica, thank you so much for your insight on today's edition of Wealth Matters for Physicians. A lot of great tax tips as we get closer to the end of the year.
Yeah, absolutely.
If you'd like to discuss the information explained in today's video, receive a complimentary analysis of your investment portfolio or retirement readiness, or discuss any other personal financial planning area with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732, or by emailing Jesse at his email address, which is also in the description of today's video below. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video interesting or useful, please share it with him or her to help them also get their finances optimized. Lastly, as always, if you have any topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you. So please share your comments in the comments section below. Well, that's all for now, physicians. Thank you very much for watching today's video, and I look forward to being with you again in our next one. Until then, be well, and remember to keep on optimizing your finances, or let us help you if you'd like.